Welcome back to the show. Today, we are taking a deep dive into the market movements for July 9th, 2026. Navigating these volatile waters requires a highly disciplined strategy and a clear understanding of the underlying data. We have three very distinct setups on our radar today: Criteo, EverQuote, and Taboola. Each of these companies presents a unique narrative, from takeover arbitrage to clean technical breakouts and even conflicting market data. Let us start by looking at Criteo, trading under the ticker CRTO. It is currently sitting at $22.83, showing a mild pre-market pullback from its previous close. What is driving the narrative here?
The dominant catalyst for Criteo is a massive takeover bid. On July 6th, Vista Equity Partners and Quinti Capital made an offer to acquire the company at an estimated 50% premium. This announcement caused the shares to surge over 21%, closing at $23.17 that day. D.A. Davidson also reiterated a buy rating with a target price of $24. Right now, the stock is consolidating around $22.80, which is completely normal after such a massive spike. It indicates some mild profit taking rather than a reversal of the bullish sentiment.
A 50% premium is a significant valuation validation, yet the stock is trading below the implied offer price. That suggests the market is pricing in some risk. What do the technical indicators tell us about the strength of this move?
If we look at the moving averages, the trend structure is strongly bullish. Criteo is trading well above its key moving averages. The 50-day moving average is at $17.99, and the 200-day is at $19.34. We actually saw a golden cross form in late June, which confirms the longer-term uptrend. However, the gap between the current price and these moving averages is quite wide. The relative strength index is hovering around 72, which puts the stock in overbought territory. The MACD is positive, but the histogram has been shrinking over the last couple of sessions, indicating that the immediate upward momentum is decelerating. We also saw volume climax on July 6th at 2.68 million shares, which has since normalized to about 400,000 shares.
So the technicals suggest the stock is extended and we might see further consolidation. If someone is looking to trade this, how should they manage the entry and exit to mitigate the risk of the deal falling through?
This is definitely a binary event play now. The takeover bid creates a solid floor near $19, which was the pre-offer close. For a swing trade, chasing the stock at current levels is highly risky. The optimal strategy is to wait for a pullback to the $21.50 to $22 range, closer to the 20-day moving average. If you enter there, you must set a strict stop loss at $19. If the deal collapses, the stock will likely gap down, so you want to be out before that happens. If the deal progresses or a higher bid comes in, your upside targets are $24 and $25.29, which was the recent intraday high. That setup gives you a favorable risk-to-reward ratio of about 1 to 2.5.
That is a very structured way to approach a binary situation. Now, let us shift our focus to EverQuote, trading under the ticker Ever. It is currently priced at $24.80, down slightly in the pre-market. We saw consumer confidence edge up to 91.2 on July 8th, which is generally a positive tailwind for insurance marketplaces. Raymond James also upgraded their price target to $25. How are the internal dynamics looking for this company?
EverQuote is showing a very healthy and sustainable trend. We did see some insider selling on July 6th, with the chief technology officer selling just under 5,000 shares and the chief accounting officer selling 8,800 shares. However, both of these transactions were pre-planned under 10b5-1 plans, so they do not represent a lack of confidence in the company. Fundamentally, EverQuote is preparing to report its second quarter earnings on August 3rd, with revenue guidance projected between $185 million and $195 million. The market seems to be pricing in strong execution here.
The macro environment seems supportive, and the insider selling is a non-event. How does the technical chart align with this fundamental strength?
The technical setup for EverQuote is the cleanest of the three. It is trading above all its key moving averages. The 50-day moving average is at 1988 and the 200-day is at 2079. We had a golden cross in mid-June and the trend has remained firmly intact. The relative strength index is at 65, which is bullish, but crucially below the overbought threshold of 70. This means the stock has room to run. The average directional index is at 34, confirming a very strong directional trend. We saw a healthy breakout on June 26th on high volume, and the recent pullback to 2480 has occurred on declining volume, which is exactly what you want to see in a bullish consolidation pattern.
A strong trend with room to run is exactly what swing traders look for. What are the specific trade parameters for EverQuote?
This is our highest conviction setup. The entry zone is between $24 and $24.80. You want to place your stop loss at $22, which is just below the 20-day moving average and the recent consolidation support. Your first target is $26.50, which represents prior resistance, and your second target is $28. This gives you a risk to reward ratio of 1 to 1.8, supported by strong institutional buying and clear fundamental drivers.
Now, let us turn to Taboola, ticker TBLA. The data here is particularly interesting because we are seeing two very different market perspectives in the reports. On one hand, we have a highly bullish narrative showing the stock at $5.43, driven by massive partnerships and AI integration. On the other hand, there are technical reports flagging the stock at $3.80, warning of a potential death cross. How should our listeners interpret these conflicting signals?
It is a fascinating divergence, and we have to analyze both scenarios to protect our capital. Let us look at the bullish case first. If the stock is indeed holding at $5.43, it is trading near 50-week highs. Today, they announced a deepened partnership with Oppo and Realme, two of the largest smartphone makers, which gives Taboola massive distribution. They also announced that the Korean publisher WikiTree has adopted their generative AI answer engine, Deeper Dive. The technicals for this scenario show a recent golden cross, with the 50-day moving average at 476 and the 200-day at 392. The relative strength index is at 59, which is neutral bullish, though stochastics are overbought at 88.
And what about the alternative scenario where the stock is trading around $3.80?
If the price is at 380, the technical picture is completely reversed. The stock would be trading below its 50-day moving average of 392 and its 200-day moving average of 4.08. This puts it on the verge of a death cross, indicating a lack of institutional support and declining momentum. In this scenario, there are no near-term catalysts, and the stock is drifting lower on below-average volume.
So we have a clear split. How do we translate this into an actionable investment strategy for our listeners?
We must treat these as two entirely separate strategies. If the stock is trading in the lower range near 380, our recommendation is to sell or avoid it entirely. The opportunity cost of holding a stock in a downward trend with a looming death cross is too high. However, if the stock is holding the breakout at 543, it represents a strong momentum play. For the bullish scenario, the average analyst price target is 632, representing a 23% upside. You would look to enter on a pullback to the 530 range with a stop loss at $5 targeting 632.
That is a critical distinction. It highlights the importance of executing trades based on the actual price action you see on your screen. To wrap things up, let us summarize the complete action plan for our listeners based on today's analysis.
Let us lay out the final strategy. From a news sentiment perspective, Criteo is bullish but event-driven, EverQuote is moderately bullish with strong fundamental backing, and Taboola has strong partnership catalysts but faces technical divergence. Fundamentally, EverQuote is the strongest compounder, while Criteo is a pure arbitrage play. For swing trades, EverQuote is the highest conviction buy. You should start investing in EverQuote now at the price point of $24 to $24.80. For Criteo, the recommendation is to wait and buy only on a pullback to the $21.50 to $22 range. For Taboola, if you are looking at the lower price scenario, avoid it. If you are playing the breakout, wait for a confirmed hold above 530.
And what are the risk mitigation parameters for leaving the market?
To mitigate risk, you must know when to leave the market. For EverQuote, your exit point to cut losses is $22, and your target exit points to take profits are $26.50 and $28. For Criteo, you must leave the market immediately if the price drops to $19, and your target exit points are $24 to $25.29. For Taboola, if you are holding the lower price position, you should exit now at $3.80 to prevent further losses. If you're in the bullish trade, your stop loss is $5 and your target exit is $6.32.
Thank you for this detailed breakdown. It gives our audience a very clear roadmap for managing these setups. Remember to subscribe to the US Stock Picker podcast channel for more in-depth market analysis and strategic updates.
Thank you. Stay disciplined and trade safe.
The information provided here and on this channel is for general informational and for education purposes only. It does not constitute investment advice, financial advice, trading advice, or any other sort of advice. We makes no recommendations regarding investment decisions based on this information. You are solely responsible for your investments. Please conduct your own research and consult qualified financial advisors before any investing.
Clickbait video title, Top 3 Massive Upside, Potential Stocks to Buy Now, will snitch technology stock predictions and growth stock picks, pop stocks, alert on stocks, to trade podcast.